Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap. And here's a look at how the latest session played out. And we've got a bit of a mixed one with the Dow Jones Industrial Average up 0.5%. That's 220 points higher at 42,518. The S&P 500 squeezing out a small gain of 0.1% to 5,843. And we've got the Nasdaq Composite on the other end down 0.2% to 19,044. So big technology stocks slipping, and that weighed on S&P 500 and the Nasdaq. The likes of Nvidia down 1.1%. Meta Platforms fell 2.3%. Investors seem to flock to utilities, financials, and materials. For more insights, we are joined by Ryan Dietrich. He is the Chief Market Strategist at Carson Group. Ryan, thanks for joining us on the show again. Great having you on. How are you doing?
Ryan, like we've said before, it's always nice to talk to another Ryan, first things first. So thank you for having me, and looking forward to the new year here in the United States. Let's see what happens.
Yeah, Happy New Year to you, Ryan. How is the year playing out for markets right now? What's your takeaways?
Well, as most people probably know, the S&P 500 gained over 20% for the second year in a row last year, but it's been rough going so far, just like you talked about. We're negative for the year. You've seen technology lagging. I guess it comes down to this. We're not overly concerned. After more than a 70% gain off those October 22 lows, maybe it was simply due for a little pause. As people know, there's a new president coming. There's some little bit of jitters. Historically, the first quarter of a new president, the market doesn't do all that well the first quarter of a new president. So we're not shocked by the choppiness. We don't think the bull market's over. We think the economy in the U.S. is strong. We can get into that stuff. But the reality, again, I think it's just kind of some indecision here. And after a heck of a year, after two good years in a row, I think market's kind of just catching its breath, which is perfectly normal.
Yeah, talking about adjustments, we've got in the news Meta set to cut about 5% of its workforce. CEO Mark Zuckerberg saying it's about moving out low performers faster. And this is being dubbed the 2025 as an intense year. And you might remember not too long ago, we had a year of efficiency. Does this reflect what else is playing out in the sector where tech companies are starting to, recalibrate and try and figure out how to monetize technology and AI a bit more?
Yeah, listen, I think it's the old saying, history doesn't repeat itself, but it often rhymes. 2 years in a row now, we've seen a lot of these big tech layoffs early in the year. And listen, I'm not a tech person, but I think there is something to the calendar here where tech companies in general, which grew so much during COVID. Meta did, obviously, and Google, Alphabet, Microsoft, all the Mag 7. They grew so much. And then, the last couple of years, we have seen some big layoffs. We have seen some big headlines with companies doing this. Obviously, people that lost their jobs at Meta, it's very, very unfortunate. But as a percent of size of the whole company, I don't know that off the top of my head, but obviously, it's a fairly small part of the company. So for now, I think it's something that is more industry specific. When we look at technology, I wouldn't be shocked at all if we saw a few more big tech names kind of do this. Because again, we've seen this the last 2 years, but let's not forget we just had a real strong jobs number here in the United States. We gained 2 million jobs last year on the heels of 2.4 million the year before in 2023. So this is one we got to keep our eyes on. Not overly concerned. I think it's more sector specific. And, again, we've seen this before, Ryan.
Yeah, talking about what we've seen before, we've got Donald Trump back into the White House in the coming days. Yeah. And one of the, deals that are going to be closely watched is what will happen to TikTok. And now Elon Musk is in the equation, and he is potentially one of the options which could see him buying TikTok. What do you see as the potential scenarios playing out? Is this a likely scenario?
Yeah, boy, this is one that just broke, obviously recently. And as I've thought about it, I think it is likely. Obviously, Elon Musk has a lot of money, last we checked. And clearly, when it comes to Elon Musk and the new administration coming, They're obviously pretty good friends, so there could be you don't have to worry so much about antitrust and certain rules and certain things, given he already owns X/Twitter. So, we'll see. I know the U.S. has been pretty big, clearly saying that something has to happen. There are those betting markets you can look at that, will the U.S. kind of put a hold on TikTok, close everyone's TikTok accounts by May? Those were the odds going that way. So I think, if they can have some type of deal where it's controlled in the United States to a degree, at least the United States part of TikTok, that is something that the new administration really, really wants. Now, we'll see, but I think, Elon Musk obviously is big when it comes to social media, and him taking at least the American part of TikTok over is something that, I guess we could say makes sense now, but, I guess buckle up and let's see what really happens.
Yeah, clock's ticking on TikTok to have a deal done by the end of the week. Mm-hmm. All right, let's talk about what else is coming up for the rest of the year. What's your take on how investors should be positioned as we go along? Because you've got a couple of things to watch out for. You've got Donald Trump in the frame. You've got the Fed starting to, I suppose, investors expecting fewer rate cuts. How did all that play out?
Yeah, boy, there's a lot there. A year ago right now, when cuts from the Fed last year, and obviously that didn't happen. We only saw 3 cuts totaling 1%, 100 basis points. And now here we are, the other side. We think it's the other side. Now we're being told maybe only 1 cut, maybe 2 cuts. We think it's swung too far the other way. The pendulum has just today. We got some pretty decent economic data, specifically inflation data, in the United States on the producer level wholesale prices. Tomorrow we get the consumer price index, which is a big one. And, we expect to see inflation continue to improve. The last 2 years, we've seen spikes in inflation early in the year. January and February. And that's got some seasonal quirks to it, I think. I wouldn't be shocked at all if it happened again. But the truth, again, we think inflation will continue to improve in the United States. What's that mean? It means we might see probably more rate cuts. But then just getting to the economy quickly here. The U.S. consumer continues to be strong. The labor market, like I mentioned, we just had the lowest number of initial claims all year, or in a year, just last week. So, we're not seeing people right now. We mentioned Meta there, some layoffs coming, and that might spike a little, but we're not seeing it across the board. Consumer is still strong. Earnings season's kicking up here in the United States very, very soon. We're looking at record earnings, 15% growth this year in 2025, coupled with record profit margins. There are cracks in this economy in the U.S., no doubt, with the higher yields that are out there, the stronger dollar. Housing market obviously has been very, very slow, if you will, due to the higher yields. But the reality, again, is the economy, in our opinion, will not have a recession this year. We still think it's a bull market. Do we gain 20%? No. We just released our outlook just today. We think stocks will probably gain between 12 to 15%, which is a pretty darn solid year. Might be rocky, might be choppy, might be frustrating, maybe the first half specifically. But this is still a bull market and still a pretty strong economy in our view, Ryan.
You mentioned rates are possibly going to stay higher for longer. How's it going to play out for the U.S. dollar? Are you expecting a stronger greenback? And in turn, will you see a weaker gold price in the coming year?
Well, listen, if the dollar gets extremely strong, there could be a lot of problems out there. Because when the dollar is really strong, that means people are coming to the dollar, for safety. And we saw that the first 10 months of 22. We've seen that before. So we have seen a very strong dollar since the election. Now, Donald Trump, when he was in office, like you mentioned last time, he doesn't like a strong dollar. So he announced not that he's like really, truly the one moving the dollar, but he can jawbone things. He can try to pressure things. Our base case, again, is if inflation continues to improve, maybe later in the first quarter into the second quarter, like we think it could, there's a lot of people that think yields are only going to go one way, that's higher, that the Fed's not going to cut, that the dollar only has one way to go, and that's higher. A lot of things are being priced in. We think the opportunity to the other side. So what we're expecting is, again, some type of major peak in the U.S. dollar here, probably fairly soon, probably pretty darn soon, next month or so, and yields can work their way lower, and that can be an opportunity to keep this bull market going. But also, like, we've got a little sliver in gold. We manage a lot of money. We've got a little sliver in gold in some of our tactical models we have for a while. We still think stocks will do better than bonds. Bonds will do, we think, maybe 4 to 5% this year. But again, it makes sense to have a diversified portfolio. If some of these bullish points I've noted don't work, you don't want to just be in stocks. But again, I think the opportunity this year is more cuts than people thought, much like last year was less cuts than people thought, and you need to think like that. And how can you benefit from that? And again, potentially gold, a little bit lower dollar, and still bull markets, how we're positioning it for here.
Potentially a contrarian view that could play out the dollar perhaps overpriced or a bit toppish right now. We've been in conversation with Ryan Dietrich. He's the Chief Market Strategist at Carson Group. Ryan, thanks for your time and insights. Always great chatting with you.
No, absolutely. I'm honored to do this and look forward to talking next time.
Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.